Sure. We have released our results yesterday. Revenue is at around 871 million. I think if we compare to the first half of last year, of course there's around a 4% drop. But comparing to the second half of last year, actually the revenue remained relatively stable, and net property income is actually up. So we actually see the downward trend narrowing in our type of malls, in the neighborhood malls, and we also see more tenants becoming, turning positive in terms of rental reversion going forward. I think the major drop in the results is due to the increase in finance costs, but I think that effect would be, that performance would be relatively stable in view that, the interest rate has probably peaked. So we expect a better set of results in the second half of this year.
Yeah, I was just going to ask you about that because, the Fed on the verge of starting to cut rates, right? You've got the Hong Kong dollar, US dollar peg. There's one. The SGD, of course, is more due to a mysterious basket of currencies, which they will never talk about. But essentially, look, if the problem is rental renewals, your tenants are asking for or trying to bargain for a lower rent because business is just so poor or slow, at least the fact that rates are coming down should be helpful to you, yes?
Yes. I think the fact that, as you mentioned, property agencies was the sector that was underperforming probably starting from first half of last year. So basically, they have already gone through around 18 months of negative reversions. And I think the bulk of the property agencies in our portfolio has already reverted to market levels. So we expect the decline to be less than what we have experienced previously. And then on top of that, trades that are predominantly the two major trades in our mall, including the food and beverage and also the services and education, actually recorded mild positive reversions in the first half of this year. And then if we look at the occupancy itself, we have actually managed to increase the occupancy to now close to 95% at 94.8%. And with the completion of our largest asset enhancement project at Plus Wu, that was completed in July this year. We expect the final phase of the renovation to be leased out in the second half of this year, so that would further provide some support to our revenue and our occupancy as well.